A classic brand, an iconic image. For over a century, it's been clear consumers dig denim. With Levi Strauss on the public markets, should investors zip this stock up into their portfolio?
We've seen it over and over again. Investors tend to get way too excited about IPOs. Initially, you might have some great gains, but then something goes wrong, the stock comes crashing down. Now, that is not the company's fault very often. I want to take Levi Strauss. This is the storied jeans maker that came public in March. At the time, I told you this was a good company with a stock that was simply too expensive. It was trading around $22 and change. I said maybe wait for a pullback below 20. Then earlier this month, Levi's reported, well, an okay quarter. The actual results were solid, but management did warn of moderating growth in the second half thanks to weakness in the U.S. wholesale business, meaning that department store customers are struggling. In response to the stock got hit, and it continued to drift lower to the point where, lo and behold, it's at 18 and change, where we said it might be pretty good. So has Levi's finally come down enough to be worth buying? Let's check in with a terrific guy I've known for a long time, Chip Bergh, the president and CEO of Levi Strauss & Company, get a better sense of what's new at this 166-year-old company. Mr. Bergh, welcome back to Mad Money.
Thank you, Jim. It's great to be here. Great to be here in sunny downtown New York.
Well, Chip, you got the right outfit. Now, when the last quarter was tough because everyone expected you're the only real growth apparel company that people are looking at. And you've done so well for so many years in terms of what's going on. But there is a problem with the, let's say, the end, not the consumer, but the end consumer of your product, the department stores. Should we feel better now than when you had the conference call?
Well, let's first get the facts right.
Okay,
we had a great quarter.
Okay.
We grew 8% on a global basis, excluding foreign currency.
Okay.
All three regions grew. All four brands grew. We grew men's, women's, tops, bottoms. All channels grew. U.S. Wholesale globally grew 6%. Our DTC business grew double digit for the 13th straight quarter in a row. U.S. wholesale was down 2%.
Right.
However, if you back out the impact of Sears and less revenue to off-price, Ross, TJ Maxx, if you back those out, our U.S. wholesale business was up 2%, and up 2% on top of comping high single-digit growth the prior year. So on a two-year stack basis, we were up mid-single digits.
So do you think that the stock got ahead of itself? The analysts may not have gotten it right because the notion was that your guidance was more tepid than how you reported. And I said it was an okay quarter, but you could argue better than an okay. But it did feel like that you were saying, whoa. I mean, maybe people are ahead of themselves with the stock, not that we're not doing a good job.
Yeah, we've been guiding mid-single digits top-line growth for the full year. And we said that we only guide on an annual basis because we're running this business for the long term. But we've been saying all year mid-single digits. We're up 10% through the first half. And we said on the call, at the high end of mid-single digits, which, you know, the analysts can do their math, and that implies kind of a 3 or 4% second half coming off of 10% in the first half. And it is driven largely by some softness in U.S. wholesale, and we have some high things in the base as well. So, but it is mostly, you know, some caution, I guess, around U.S. wholesale. However, having said that, I am a big believer in winners and losers. I think this world is coming down to winners and losers. The Levi's brand is incredibly strong, and so we're in a position with all of our customers to be asking for more, floor space, more open to buy budget. They need us, they need strong brands today, and Levi's is a brand that can drive traffic for them.
All right, so speak to me about some issues involving some new products that we need in the pipe, some adjustments maybe, some resets, because I want to, again, just focus on the fact that after the quarter, the stock went down, and I, at 18, want to hear 3 bullet points why things are right between here and the holiday season. New products, direct-to-consumer, those sort of things.
Our fall-winter season just hit the stores literally this week. We've got some really strong collaborations happening, and that brings a lot of heat to the business. So you'll like this one. We've got a collaboration with Hello Kitty. Hello Kitty hits 45 years old. That's going to make you feel really old. But we've got a collaboration with Hello Kitty. We've got a very successful collaboration right now with Stranger Things, the hit Netflix show. So all of that's on floor now. We've also introduced this laser technology where consumers can customize their own jeans online. So a consumer can go online, literally designed their own jeans. It'll be finished by a laser. I'm wearing a pair of camouflage jeans, which is probably hard to see on TV right now, but this was finished by a laser. And we can finish a pair of jeans for the consumer and ship it to them in less than a week.
Personalization,
Customization,
which we know
personalization
has worked so well for so many brands, and now you're doing it.
It is a huge part of what we're doing. In fact, in all of our mainline doors around the world, we've got tailor shops. And so really catering to the consumer, we're letting consumers personalize and customize their own T-shirts. Our T-shirt business is on fire. So I'm very optimistic about the future here in the U.S. and also globally.
We have a lot of millennials who watch. As long as I've known you, and I met you through Mark Benioff from Salesforce, you have been the most socially conscious CEO I've come across. Talk to us about what you're doing so your clothes tend not to be landfill clothes.
That's right. Well, sustainability is really important. We're a company that really is all about our values. We talk about value and values. One of the things when we did the IPO, I said, we're not going to change how we run this company. We're going to continue to stand for things that are important. This company has a track record of not being afraid to take a stand on important issues of the day. Sustainability is really important for us. We use it as a constraint in innovation. In fact, this laser technology is just one example. We developed this technology primarily to eliminate a lot of the chemicals that are in the supply chain. Finishing a pair of jeans requires dozens and dozens of chemicals. We've eliminated over 1,000 chemicals by being able to finish our jeans with a laser. This shirt that I'm wearing, I wore it just for you, Jim. It is a combination of cotton and hemp. Now, hemp historically has been like burlap. It's a very tough fiber. We've worked with a supplier that creates cottonized hemp. So this product feels as if it's cotton, but it's also woven with hemp. Hemp is a lot more sustainable. It takes less water to grow than cotton. You can grow a lot more per acre of land. So it's a lot more sustainable as a fiber, and it's cheaper as a fiber too.
One last question. I've always felt that when I mention textiles and workers, people say they don't treat their workers well. And I hate the they, because you've been extraordinary in what you've done.
Thank you. We've got a program called Worker Wellbeing, which we've worked with a number of NGOs in most of our factories around the world now. We've touched over 200,000 workers in our supply chain, focused on making their life better and making them more productive as an employee in the factories that make our clothes.
Well, I know you live this. You don't just talk it, you live it. Okay, that's Chip Bergh, CEO of Levi Strauss & Company. Guys, now what can I tell you? At $18, you're getting a bargain. Mad Money is back after the break. Thanks, Chip.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.